Well, joining me now in the studio, Vincent J. Russo with another In the Legal Know. And today, yay, we're talking about taxes. Vincent actually is here for some tips on how to save money on your 2022 taxes because, Vincent, right, it's not too late.
Not too late at all. So it's Groundhog Day.
Yes.
And so it's tax season again. That's how I know it's the beginning of the season. So it's important to start early and don't delay. That's the message I would give right up front. So April 18th is the date that you have to file your tax return. If you're going to get a refund, the sooner you file, the better off you are with getting that money back into your pocket. And so I would say that the starting point is to get organized. You know, organize yourself. You need your W-2s if you're working, your 1099s. Pull out last year's tax return. Maybe pull out a tax checklist or an organizer if you're working with a tax preparer. And pull all that documentation from the past year and get it all in one place. So in January, a lot of mail came in with all this information. Hopefully you've been putting it aside in one place.
Yes.
So that's
putting it in its own special little folder,
which
we learned to do years ago, which is, great. And when you said April 18th, people don't, you get a couple extra days this year, by the way, right?
Because the 15th's on a Saturday, that gets you to Monday. Monday's a holiday up in Massachusetts. I'm not sure of all the technical reasons why, but we get to Tuesday.
Patriots Day. But
Patriots Day.
But don't delay. Okay, you get 3 extra days, but don't delay.
Don't delay.
Okay, so what can somebody do? Right, you said it's not too late. You can lower your tax bite?
Yes. So there are a handful of items that I would want to address. So let's start with the first one, which would be contributing to a retirement account. So you still can put money into an IRA, and you have until April 18th to do that, and that'll be a deduction for last year. So you can earmark it as a deduction for last year. So that can lower your taxes. So that would be the first one I would suggest, all right? Itemizing your tax deductions would be another way of lowering your taxes. Now, most taxpayers do not itemize. But if you have itemized deductions of more than $12,950, if you're single, or married, $25,900, then you can lower your taxes by itemizing your deductions. That's your mortgage interest, your real estate taxes, income tax. There's a limitation on that to $10,000. Charitable deductions, those are your itemized deductions. So that's another one. Don't shy away from home office tax deduction. So if you're self-employed, especially with the pandemic, many people were working from home. And if you have a business and you're working from home and you have a space in your house exclusively for work, then you can take a deduction for the expenses related to that space in your house. So that's many people shy away from that. They're worried they're going to get audited.
Right.
But if you're entitled to it, do it the right way. Don't get greedy, and take that deduction can lower your taxes. If you have dependents, make sure when you're filing the return you put their Social Security numbers down. If you fail to do that, you won't get the deduction or the child credit. So some people are reluctant to put Social Security numbers down, but you have to do that or else it's going to bounce back and you're going to have an issue.
Okay.
Check new rules on credits and deductions. So I'm going to run through this real quick. But the child tax credit, the earned income tax credit, the premium tax credit, the clean energy vehicle credit, are all credits, and the laws keep changing and how much you can take and who can qualify, but those credits are against your tax and lower your tax payment. Also charitable deductions, charitable giving can always save potentially taxes if you're itemizing your deductions.
Okay, and like you said, the laws keep changing. Where do you find the latest on, what you're eligible for there?
Okay, well, it's first you have the IRS.gov website. Okay. Tremendous amount of information there on what you can do. And so when you're looking at the deadline for filing, it's really important that you file on time and you pay your tax. If you're not going to be able to do it timely, then you file for an extension. And as long as you timely file for an extension, then you can file your return all the way up to October 16th. But here's the trap. You still have to pay the tax by April 18th.
Right.
Or else you're going to be subject to penalties for late filing and late payment. And that can really add up.
So that really is your only way to avoid the penalties.
Yes.
Get it in.
Yeah.
Get that, you get the payment in on time this year, April 18th, everybody.
Right. Now there's also, if you have a lot of passive income, you're retired and you have interest and dividends from stocks and bonds and the like, you're required to pay an estimated tax along the way, 4 installments over the year. If you haven't done that, you could be subject to penalties again. So it's not too late to send some money in now if you need to stop the running of the penalty. And that'll save you money later on as well.
I know this, we know we have to do it every year. It gets confusing with new laws. And I'm sure it's tough to do it by yourself. Seek professional help if you need it, right?
Yeah, that's right. That's invaluable. But I will say that the IRS has a free fillable tax form on the site. So you can go on and actually prepare your return on the government website. They also partner with 8 commercial vendors, tax preparing companies. And if your income, adjusted gross income, is below $73,000, you can do it for free. So
wow, that's great.
TurboTax, H&R Block, and some of the others have made a deal with the government, and you can get your taxes prepared for free. Otherwise, yeah, see a professional.
Yeah, there's free help out there. Oh, Vincent, thank you so much. We appreciate it.